Okay, great. So now I want us to look at partnerships. So mainly I wanted us to look at question 2, which is the partnerships, right? So before I do partnerships, question 2, or let me give you guys the opportunity to vote, right? Do you guys want to do question 1, where we will be dealing with the income statement, or you want us to do partnerships, where we will be dealing with the current account? So you are more than welcome to unmute or type in the chat box. Uh, you can type if you want question 1 or 2. Question 1, income statement. Question 2, the current account. Hanya, thumbs up, or which one are you indicating? You can unmute or you can type. Is it question 1, income statement? Question 2, the current account? So Hanya says current account. Okay. Can we get another vote? Can we get another vote? Question 2. Okay. So definitely we are moving with question 2. Okay. Now, here's our answer book. And this is where we will be answering the current account, right? So if we get time, we will also look at 2.3. Okay. So nonetheless, it is very important, right, to read the information and answer accordingly. So now let me just do this. So 2.1, match the description in column A with the term in column B, but this one is very basic, right? I could give you guys okay, but it's fine. Let's just do it. Match the description in column A with the term in column B. Write only the correct letter next to the question number, right? But this one, it's not difficult. It's just theory. So I am more interested in doing this where we prepare the difficult stuff, right? This one, if you really struggle, you are more than welcome to text me. Okay, 2.2, prepare the current account note to the statement of financial position on the 29th February 2024. So we need to refer to information A and B. Where is information A and B? This is information A and B. So we are given the post-adjustment trial balance on the 29th of February 2024. Now, this is the trial balance. I'm comfortable with the trial balance. Now, A, Rose increased their capital by 20,000 halfway through the year. This has not been recorded. Very important. This has not been recorded. Daisy's capital remained the same throughout the year. So here's the partnership agreement. So interest on capital is calculated at 10% of capital balances. Daisy's bonus is 50% more than that of Rose's. The total salary paid to Rose amounted to 159,000. Let me just zoom in for you guys. Okay, so now the net profit for the year amounted to 600,000. The remaining profit is shared between Rose and Daisy in the ratio of 2 to 3 respectively. Daisy's drawings amounted to 85,000. Rose withdraws 50% more than Daisy. Right, so this is what's happening. So I want us to answer this part, right? So I want us to answer this current account part, right? So now everyone is comfortable on what is a current account in terms of partnerships, right? I have a video where I have done a separate tier account on current account. Right? So basically, yeah, we are looking at the current account of each partners, right? So basically what they are entitled to, right? So of each partner. So a current account, you do not combine it. You look at it individually. So, okay, perfect. So now we start off with the basic one. Right? We start off with the salaries, the first one. So we are already provided with Daisy's salary, right? So we need to take into account Rose. But now it further states that in salaries, it further states that the total salary paid to Rose amounted to 159,000. However, this included her salary for March 2024. And we only want the salary for what? For 1st of March 2023 to the 29th of February 2024. That's where we are interested in, right? So that's what we are interested in. We are not interested in this amount that was paid on the 31st, I suppose, of March or for March 2024, right? So we are given a place where we could do our calculations, right? So this place where we could do our calculations, we could simply state that we want this amount to be exclusive of the March salary, right? So now they further told me that both partners are entitled to 1,000 rand increase per month on the 1st of January each year, which has been taken into account. Right, both partners are entitled to 1,000 rand increase per month on the 1st of January. So there are many ways to calculate this, but first of all, what we need to do is to remove the increase. So meaning that if it increased by 1,000 rand per month on January being month 1, February being month 2, March being month 3, it means that they were 3 months. Let me see. So meaning that they were 3 months where the 1,000 rand was utilized, right? Or where the salary was increased, right? So this gives us a total increase of 3,000. So what we are going to do is that I am going to take the total salary paid of 159,000. And then I will remove what? I will remove the 3,000, right? Because of this shows us the increase, right? So I want this without the increase. And now this is going to give me what? This is going to give me 156,000. Now, this 156,000 represents 13 months because of now the salary for March, which is not part of our current financial year, has been paid, right? So now what I am going to do is that I will take this 156,000 divided by 13. And now this is going to give me what? 156,000 divided by 13. This is going to give me 12,000. Right. So now this 12,000, it is what was paid monthly without the increase. So meaning that when we want to take out the increase, we take out, or if we want to take out the March salary, we would take the 159,000 less the salary for what? For March. The salary for March includes what? The salary for March is the 12,000 plus the increase of 1,000. And this gives me 13,000, right? So that gives me 13,000. So even in this case, I'll take 159,000 less 13,000. And this will give me what? 159,000 less 13,000. This will give me 146,000. Right. So this 146,000 is what will be my salary for Rose. 146,000. Right. Okay. After that, we need to calculate the interest on capital. So we need to do what? We need to calculate the interest on capital. Right. So us calculating interest on capital should not be a very difficult one, but we are given a space where we could do our interest calculations, right? So we could do what? Our interest calculations. So now we look at this trial balance that we are given, and we are also told that there is a 10% interest on the capital, right? So that is very important. Now, however, Rose withdraws 50% more than Daisy. So Daisy's drawings amounted to 85,000, and then Rose withdraws 50% more than Daisy, which is not a major problem to what we are dealing with. Now we also have part A, which says Rose increased the capital by 20,000. So now this, it has been increased halfway through the year, meaning that 6 months into this current year, right? So now, what does this mean? It means that the capital of Rose increased by 20,000 after 6 months. So we are going to calculate the interest. We are going to calculate the interest. So now we take the capital of Rose, right? So the capital of Rose is 290,000. Then we are going to do what? We are going to account for the interest. Right. So as we account for the interest, we need to take into account that I only want to account for interest for the 6 months, right? Or I can do for the full 12 months and then do the 20,000 for the 6 months. It doesn't matter. You will arrive at the same answer, right? You will arrive at the same answer. So if we do it like this, it will give us 290,000 multiplied by 10% multiplied by 6 over 12. This gives me 145,000. No, 14,500. Now, moving forward, this interest or this capital was increased by 20,000. So I am going to add 20,000 to this 290, giving me 310,000. I am going to do the same. The interest didn't change. I am still using the 10%. Then I will multiply by the 6 over 12. So 310,000 multiplied by 10% multiplied by 6 over 12. So this would be 15,500. Now, when I add everything together, this is going to give me 30,000. Right. So this is my interest on capital for Rose. So if you have questions, you are more than welcome to stop me. Right. So this is going to give me 30,000. Moving forth, interest on capital for Daisy. Right. So now, Daisy, interest on capital we start off with the capital amount, right? So if we want to do Daisy's one, right? So we start off with what? With the capital amount. So which is the 280,000. Now the interest is still 10%. This would give us what? 28,000. Right. So that would give me 28,000. Now I need to calculate my bonus for Daisy. So I need to do what? Calculate my bonus for Daisy. So what do you guys think would be the bonus for Daisy? So they are saying that it is 50% more of rows. Right? So this will not be a difficult thing to do, right? So we just take this, we should just take rows bonus of 25,000, and then we increase it by what? By 50%. And then this would give me what? This would give me 37,500. Right. So that would give me 37,500. I apologize for not writing it well. Yeah, let me do that. So that would be 37,500. So that is my bonus, right? So the net profit is not really a difficult thing to calculate. It will just be the sum, but we will do it, right? Now, final distribution. So final distribution is what's at hand now. So I want you guys to help me out here. What is the final distribution? So this one, just to make sure that you guys are active, I want you guys to give me the answer of this one. I want you guys to be active. What is my final distribution? You guys have to give me this one. Okay, Matlori says the final distribution for Rose is 60,600 and for Daisy is 90,900. So, Matlori, I want you to provide us the steps or show us how you got it. So I want you to show us. I'm not saying that you are wrong, right? You are 100% spot on, but I want the steps. So Matlori says we add the we add the final distribution and subtract it from the net profit. The amount remaining is then shared according to the ratio. Yes, I want your description in amount. I want your description in amount. So I want you to give us the steps of how you got the 60,600 and then 90,900. So if you could do a calculation, that would be appreciated. Okay, you've given us the step. Okay. So Matluri added the 200,000, 201,000 plus the 247,500. This is giving us 444,500. Okay, next step. Now she's saying that in a comment that she subtracted it from the net profit and then she shared the remaining according to the ratio. So basically, if I were to save time for you guys, she's saying that, okay, but let me give her the opportunity to show us, right? Sorry, this is your moment to shine. So, okay, we have the following steps from Matori. So she took the 600,000, which comes from the net profit here. As it states, the net profit for the year amounted to 600,000. In this case, 600,000. And then we are going to subtract the 440,000. And now that will give us an amount of, let's calculate. So, who unmuted? Kind of. Okay, sorry about that. There was someone who was unmute. But now, if we minus this 2, it doesn't give us that amount, right? So here's the typo that we had solved. So when you add this two amounts, you get to that amount, right? Now we take the 600,000 less 448,500, and that gives us 151,500, right? So now this amount, I need to distribute it to Daisy and Rose. So how am I going to distribute it? According to this ratio, right? So for Rose, I would take this 151,500 as Matori said, multiplied by what? Multiplied by the 2 over 5, right? So I would take this 151,500 multiplied by 2 over 5. This gives me 60,600. Then I am going to do the same for Daisy. I would take this 151,500 and multiply it by the 3 over 5. And this should give me 90,900. Right. So that's how we get this amount, right? So to get the net profit, it is very simple, right? To get the net profit, it is very basic. Getting the net profit is very basic. You just, in the simplest way, you just have to add the primary distribution and the final distribution, right? So we would add the 201,000 plus 60,600. That would give me 261,600. And then for Daisy, what I am going to do, I would add the 247,500 plus the 90,900, right? So let's do the calculation. And that gives me 338,400. Okay, now that's what I got, right? So moving forward, we have drawings. Drawings, what did they say about it? They say Daisy's drawings amounted to 85,000, Rose withdraws 50% more than Daisy. It means Rose withdraws 50% more than this amount. So we simply just have to increase this amount by 50%. So I would take 85,000 multiplied by 1.5 because I am increasing it by 50%, right? So 85,000 multiplied by 1.5, this gives me 127,500. Right. So this is what I am going to write here. 127,500. That's my drawings and should be in negative. Okay, then now I need to take into account my retained income, right? So I need to take into account what my retained income. So retained income, it is not that difficult, right? It is not that difficult. So what you just have to do in simple terms, you have to do what? You have to take your net profit. You need to take your net profit less what? You need to take your net profit less your drawings. This net profit less drawings. You are going to get your retained income. So this would be 134,100. Then I do the same. This part for Daisy. I am going to take net profit of 338,400 less the 85,000. This will give me 253,400. Now, we are going to be having our balance at the beginning of the year. So we are going to be having what? Our balance at the beginning of the year. So what's going to be my balance at the beginning of the year? I am given the balance at the beginning of the year. So the 1st of March 2023 is the beginning of this current financial year, right? So now this would be what? This is a debit. So a debit is a negative, then a credit is a what? Is a positive, right? So this being a debit balance will be a negative of 67,000. Then when I look into this one for Daisy, for this is a credit, right? So meaning that this is a positive, and this would be 55,000, right? So now what's going to be my balance at the end of the year? So my balance at the end of the year will be the net of this amount, right? And the sum of Daisy net of Rose. So this would be 134,100 less 67,000, right? So this is going to give me 67,100. Then I do the same for Daisy's side. 253,400 plus 55,000. So this is going to give me 308,400. So that's what I get. So just by doing that, I have my full 20. This is where you should score your marks, right? So if you have a question, you may type in the chat box or unmute, right? But I also want us to dive into this 2.3. I also want us to do 2.3. Right. I want us to do 2.3. So 2.3, it says we need to prepare the equity and liability section of the statement of financial position. So we need to refer to A to D, right? So A we have read, B we have read, A we have read, B we have read. C, it says a creditor with a credit balance of 2,000 needs to be transferred to the debtor's ledger. D, we are given that the interest on the loan is capitalized. Below is a loan statement received from Tulip Bank, and these are the this is the loan statement. So the capital portion of the loan that will be paid in the next current financial year will increase by 15,000. So that's the information that we are given. So now we need to do the owner's equity, the non-current liabilities, the current liabilities, right? That's what we need to do. So now doing that should not be difficult for us, right? So this is 2.3, right? So now my capital is very simple. Because of owner's equity, we also need to take into account our capital, our current account, right? So that's what we need to take into account. So capital as well as our current account. Capital is straightforward. We are given the capital of Rose. The capital of Rose is 290,000. We are also given the capital of Daisy, which is 280,000, right? But now, Rose increased their capital by 20,000. We also need to take that into account. Now, 20,000. So that would be, let's do it, 290,000 plus 280,000 plus 20,000. That gives me 590,000. Perfect, right? So that is my capital. Now, for current accounts, what is that? So I have a part here we need to call current account, right? So for current account, I need to add what? I need to add the balances of these two. This here I made a typo. That's correct. So now I need to add the two of this 67,100 plus 308,400. And this gives me 375,500. Now, non-current liabilities. So non-current liabilities, when we talk about non-current liabilities, we are talking about what we are owing that is more than 12 months, right? So this is more than 12 months and this is less than 12 months, right? Current liabilities is less than 12 months. So now non-current liabilities. What would be my non-current liabilities? What do we owe? This liabilities is what we owe, right? Okay, so now as I look, I am told about a loan. So a loan is definitely what? A liability. They are telling me that loan is capital, interest on loan is capitalized, right? So firstly, I need to get my non-current portion, right? So what I have now is the balance at the end, right? So the balance at the end is the 330,000. Less what? What do I want to remove? I want to remove the interest that will be paid in the next current year. So this part should exclude interest, right? I want to remove that interest. What else do I need to remove? What else do I need to remove? This is where I want you guys to give me this amount. So if you want to look here, it's also fine. But the main thing that I am interested in is this part. So what will be the other amount that I need to remove? The current portion of the loan. Okay, what is the current portion of the loan? So there is also this information, but not really helpful. Okay, so let me come to the rescue. So you see, in this opening balance, we have 380,000. And when we look at this closing balance, we have 330,000. They are saying that these repayments that you made, they include interest, right? So I want the difference between these two balances. So the difference between these two balances, if you look at it, it would be 50,000, right? So this 50,000 would be the capital repayment amount, right? So the difference between the opening and the closing balance would be the capital repayment amount. So next year we would be making an interest payment of 15,000, and also we will also be making a capital payment of 50,000, right? So this 50,000 is the current portion of the loan, right, which will be payable in 12 months. Now we do the sum. 330,000 less 15,000 less 50,000. And this gives me 265,000. That's how I do the loan. Now, liabilities, trade and other payables. What am I given relating to trade and other payables? I'm given debtors control. So creditors are part of trade and other payables. So that would be 160. What else? Accrued expenses. So liability, what we owe. Creditor, you owe a creditor. Accrued expense are expenses that you have not paid, right? So you would also owe those expenses. What else? A creditor with a credit balance. So if we have a creditor with a credit balance, it means what? It means now this creditor should be a debtor, not a creditor, right? So that's why we are going to remove this 2,000. And now this gives me a sum of, let's add 160,000 plus 3,500 less 2,000. This is going to give me 161,500. Right. So my other liability, I know I've been dealing with the non-current portion of the loan. But now what about my current portion? It's a current liability. Right. So that's a current liability. So what am I going to do with that current part? So remember, interest is what is capitalized on the loan. Therefore, that would be 65,000. Now, I need to add these two amounts. 161,500 plus 65,000. And this would give me 226,500. Right. Now, which this one will be just brought up, and then we need to add this 2, meaning 590,000 plus 375,000. And this gives me 965,000. Right. So now when I do my total equity and liabilities, I need to add the sum of everything, right? And that gives me 1,456,500, right? So that's what I get, right? So that's what I will definitely be getting. So since we still have time, I want us to go back to 2.1. So if you have a question, please ask me. You are more than welcome to type. So now 2.1, it is just match column A to column B, right? So this is very basic. What is a non-current asset, right? So how you answer a match column A to column B, even for other subjects that you are unsure of, right? So now you look at where they are talking about assets, right? This they are talking about assets. And non-current meaning that it needs to be more than 12 months. So we need to check where they are talking about assets. Here they are talking about assets. Here they are talking about assets, right? Here they are talking about none, more than 12 months. Yeah, more than 12 months. So your answer is directly B without you thinking of a lot of things, right? So basically non-current assets are assets that take more than 12 months to be converted to cash, right? Now, since you have dealt with an asset and you still have something that talks about an asset, you look for what also talks about an asset. Now we have current asset. Current asset, we know current less than 12 months. So they can be converted to cash within 12 months. So I know that 2.1.3 is what? Is D. So that's how you answer any multiple choice, right? Pertaining to any subject that you're dealing with. Start with the easiest ones and then you move on, right? Now, you need to also think of this, right? So the easiest one that you could come up with is the bank overdraft. So bank overdraft is when you have used more money than what's in your bank account, right? So when you have used more money than what's in your bank account, right? Meaning that now you owe someone, right? And then when you owe, we are talking about a liability. And a bank overdraft is a current liability because of you expect to pay it now, right? Or within the next month, because an overdraft is normally paid the next month, right? So overdraft would be A. Now you are left with 2.1 and 2.4, 2.1.2 and 2.1.4. So this deals with the solvency and liquidity, right? So now with solvency, we are talking about being able to pay all your debt, right? And then when we talk about liquidity, we are talking about current debt. Here we are talking about all debt. Solvency, we are talking about all debt. Liquidity, we are talking about what? Current debt, right? So now for solvency, as I mentioned, we are talking about what? All debt. So the business ability to pay off all its debt. So that's solvency. E. Then current debt, we are talking about liquidity, right? So that would be C, right? So this is how you answer a multiple choice question. So any questions that you have for me, we have dealt with uh, the, the whole question 2, and it was easy for us to get the full 40, what, how many marks? The full 45 marks, right? So any questions that you have for me? Okay, so now if there are no further questions, this brings us to the end of the class. I will share the recording to you guys.